Hi guys, welcome once again to my YouTube channel. So today I'll be finalizing a topic we left behind, which is how to master the break and retest with a high risk reward ratio. So I'll be using just one specific example to outline the to discuss the outlined features of proper mastery of the break and retest setup. So now we have here Solana USD on the 4-hour time frame. You know what I told you about having time frames when you are selecting setups. So when you have the higher the time frame, the stronger and more valid the setup could be. You understand? Because the higher time frame shows the long-term potential, unlike the lower time frame. You could see, for example, you could see a trend 1 sec, and the next thing you are seeing the market doing the other way, or maybe ranging itself, for example. And on the bigger time frame, you can check and find out that the market is actually ranging, and you just didn't get like a full picture of what the market was doing. So the higher time frame gives you understand. So now we have 4-hour time frame, which is a solid time frame to actually take a setup. Secondly, we are looking at clear levels. Now you can see that the market at this point, usually I like to squint, make a squinted setup. You understand? So you can see that this price action here has actually been ranging. Let me extend this, and this is like a very visible level of support right here. So this level of support is very visible, and it's obvious that this market is currently ranging, and it broke out of this broke above this resistance, and then it just kept doing its thing sideways. And we are hoping we could trade a break and retest somewhere around there. So now we are going to backtest this, because this is I'm using a web that actually allows you to a website that actually allows you to backtest, which is Go Charting, and it's free. So you can always go to this website and backtest your stuff. So so click on replay now. It's going to actually let you backtest this, and I took this data back to 2025 just to show us what a break and retest setup could actually look like, depending on what we're doing. So I don't know why this is slow, but I'm expecting to see some sort of okay. So let me show you guys what we have here, instead of wasting so much time, because I don't know why the backtest is wasting so much time. So so we had a breakout of that level of support, which you can see right here. We have this level of support here after while the range was forming. We have this level of support, which was kind of obvious. And I told you, like I said before, once it tests a level of support, it makes it stronger. You understand? Twice. Once it tests the level of support twice, then that support is strong. 3 times is even stronger. You understand? So, but beware, if you start testing or retesting the level of support too often, maybe like 5-6 times, at a point, if it starts correcting close to the level of support, it might indicate a breakout of that support or resistance, depending on the market type you're dealing with. So now we had a breakout of this 4-hour time frame support, and possibly we're looking to trade it, or make an entry on this. So the breakout indicates short, we have a good time frame, 4-hour time frame, and now we are looking for a clear level. We have a clear level of support, and now we are looking for volume indications. So volume indications around this breakout. Now look at this. When this breakout happened, now look at this. We talked about something. We talked about candlestick, previous candlestick clues, and we talked about previous liquidities from the last topic we discussed. From the last the part 2, we talked about previous liquidity sweeps and traps. Now look at this breakout here, this candle right here, this one. Now you can see that it actually broke out to 174.47, but it closed below the level of support, above the level of support rather. And after that, it kind of created a few candlesticks, then properly broke down. Remember when we talked about previous liquidity sweeps, that when a liquidity sweep happens around a breakout area, like we are seeing here, when price just suddenly breaks out and gives a wick, and then instead of reversing, after that liquidity grab, it now broke out properly with a full candlestick. It indicates stronger bearish pressure, and this is exactly what we have here. You understand? So now when we have this and we can confirm and look at this candle that actually broke out, you can see the volume spike here. Look at the volume bar. Look at how it was actually bigger than it. In fact, this volume bar was actually the largest volume bar compared to the past volume bars that have actually formed in the past maybe few months. You understand? Maybe like 2 months. You understand? This is February here. Now if you look back, you can see that there's no volume bar that's actually as large as that particular volume bar in, let's say in the whole of February. You understand? So now we are using the volume to our advantage. Now we can sense that sellers are actually in the game. We have a breakout. We have a breakout of a strong resistance, a strong support, a break below a strong support, and now we are looking for a retest. And look at the retest forming. Now you can see that while the retest was forming, the formation of the candlesticks is not as strong and institutional as this bearish candlestick. See, I told you about institutional candles in our part 2, and see how this formed. This is a clear institutional breakout. This is what we should be looking for when we are looking for breakout. We should not be looking for all these tiny candlesticks that just breaks out. That's a breakout. Let me go in. You might get stopped out, just like what happened. Because some people might have seen this breakout and be like, there's a breakout, and we are going in. And then the market just reversed, and maybe their stop loss is somewhere around here, and they just get stopped out, and then the market now broke out, and then you now say, the market is hurting my stop. The market sometimes is not really hunting your stop. You are just the one that is making bad decisions, so you don't really know what you are doing. So I'm not saying the market does not hunt stops. I'm not saying the bank, because the banks always look for the best area of liquidity to enter. You understand? Because the banks cannot enter the market without the banks needs to enter the market in areas where there are large liquidity. You understand? So that is where the market needs to enter the market. So the banks need to enter the market rather. So when you see a breakout like this, it further confirms the scenario of what you are looking for. And then the breakout timing. You understand? We talked about the breakout happening during the New York session or London session, but preferably the New York session. Although what we have here is the UTC -4. You understand? Which is the New York time. It favors the New York time zone. You understand? So now we have the time frame here, or the time here is currently 12 midnight. So 12 midnight, and if you look at when this retest is happening, or when this retest actually happened, it was around 4 in the morning. And then if you looked at when the retest, when we got our confirmation of the retest, a change of structure here, and then maybe like a proper go back, it was now like around it was around 12. You understand? Because a lot of people would be making their entries here around 12, which actually tallies with the New York session that we talked about, and even here. Yeah, I also tallies with the New York session that we talked about. This breakout, this retest here, because it was 8 in the morning, which is when the New York traders are actually coming in. So now we can see that the timing is actually a very good timing. You understand? So now we based on the setup, we want to find ourselves making our entry here. I don't care what it is. We want to find ourselves making our entry here. This is what we want to be doing. This is what we want to be doing. This is what we want to be. This is where we want to be. You understand? This is how we want to snipe in. This is how we want to take advantage of the market. You understand? So now get your entry here. You can go in with maybe 1 to 6 or 1 to 7 risk reward, or even preferably like 1 to 10. Your stop loss should be above the last corrective before the last correction before the break of structure. So I'd say something like here would be better for me. So we have 11, and how I do my risk reward ratio is when I have maybe, for example, 11, I could say, okay, let me multiply the 11 by 3, or let me multiply the 11 by 10, or you understand? So I can do, okay, let's say let me multiply the 11 by 7, for example. Then I have, what we have here is we multiply the 11 by 4, so we have 1 to 4 risk reward ratio, which is actually a solid risk reward ratio. And if you actually held on this trade for too long, which might now become a swing trade, you might actually get you might get to hold the trade longer, but you might still get some further dump. You understand? So that's the point. So now, we are in this trade, and if we actually took this trade on the 2nd or 20th, around the 21st of February, we would have held this trade till 26th of February, which is actually not bad. About 4-5 days interval of holding this trade with a solid risk reward ratio. You understand? So we had everything we were looking for. The candlestick close, we had the confirmations. We have an engulfing bar. I talked about this at this point here. We had an engulfing bar. We had a change of structure and a retest. Then we had a comeback down. So study the clues I gave you guys, the features that should be involved in the break and retest, and practice this more often, and you see how effective it is. In fact, some people use this as their model. This is their strategy. All they have to do is go back in time, maybe like 6 years back, and practice how effective this is working. For example, a person can just decide to go back to 2021 and see how this has been effective. Although Solana, I don't think Solana's chart in 2021 was quite, but let's say you can start from 2022, for example, and see how effective this can actually be to you. If it has a solid win rate from 2022 to 2025, you understand? If it has a good risk reward ratio, if the risk tolerance is okay, if the market moves in a very volatile way, study all these things and put it down, and perfect the model. If you had to refine. If you don't need to refine, but you always need to refine the trading. It's very necessary. Okay, so I hope you guys understand with this simple example. Thank you very much.